And a very good morning, investors. You're now on KleverStock with me, Wanizul Islam, and I'll be serving you the morning bell updates for this lovely Thursday morning. So let's kick it off with the opening bell updates. FBMKLCI started Thursday on a cautious note as a wave of disappointing earnings from major US companies rattled investor confidence and weighed on sentiment across our Asian markets. Now, at the opening bell, Malaysia's benchmark index slipped by 1.43 points to 1,601.26. That's reflecting continued investor hesitation amid concerns over stretched US stock valuations. Now, the decline followed weaker than expected quarterly results from Netflix and Texas Instruments, which reignited fears that the current US earnings season may not sustain global market optimism. Analysts said the local market remains in a profit-taking consolidation phase with few domestic catalysts to drive fresh buying. TA Securities, they noted that trading is likely to stay range-bound with a mild downward bias today, pointing to technical support levels at 1,564, or that is 61.8% Fibonacci retracement, or 1,527, which is a 50% FR, and a 1,490, which is at 38.2% FR. Now, resistance, it added, that remains firm at the December 2024 high of 1,644, and that's followed by 1,684 and 1,695. Rakuten Trade, meanwhile, suggested that foreign funds continue to be net sellers, keeping pressure on the market. However, it expects bargain hunting to emerge, especially as the index approaches the 1,600-point support level, predicting a rebound toward the 1,600 and 1,610 range later in the session. So that's something to look out for. However, amid the cautious mood, debutant THMY Holdings Berhad drew strong investor interest as it more than doubled its IPO price of 31 cents to 78.5 cents this morning, with 98.42 million shares traded by 9:21 a.m. Well done to THMY. Our reporter Ainun Jaria was live at Bursa to cover that. Definitely a huge offering from THMY. Now, the surge reflected robust appetite for newly listed ACE market counters despite the broader market's weakness. Other actively traded stocks included NationGate, which gained 7 cents to 1 ringgit 24 cents, and Inature up 1 cent to 21.5 cents. Among blue chip movers, IHH Healthcare rose 6 cents to 8 ringgit 38 cents. CIMB Group added 3 cents to 7 ringgit 23 cents, and Press Metal Aluminium advanced by 3 cents to 6 ringgit 16 cents. Now, we're going to be moving on to local currency updates. The ringgit opened slightly stronger against the US dollar on Thursday, supported by mild weakness in the greenback amid renewed US-China trade tensions and broader geopolitical uncertainties. At around 8 a.m. this morning, the local currency rose to 4.2240 or 4.2340 per US dollar. And that's compared to 4.2280 and 4.2325 at Wednesday's close. Analysts said the move reflected cautious optimism in regional markets as traders assessed developments surrounding potential US restrictions on critical software exports to China and also fresh sanctions on Russia. Bank Muamalat Malaysia Berhad's chief economist Dr. Muhammad Abzanizam Abdul Rashid said the US dollar index, or the DXY, it dipped 0.04% to 98.897. Now, that's indicating a mild retreat in dollar strength as market sentiment shifted toward risk assets. Now, Abzanizam said that signs of US-China trade uncertainties have resurfaced, with the White House weighing its options to restrict critical software exports. At the same time, the Trump administration has also announced sanctions on Russia's biggest oil producers due to a lack of commitment by the Russian government to end the war in Ukraine. Now, Dr. Afzanizam added that given these developments, the ringgit is likely to exhibit positive momentum, with the dollar-ringgit exchange rate expected to hover around 4.21 to 4.22 for today. Now, despite the ringgit's modest gain against the US dollar, it has traded mixed against other major currencies. Now, the local note strengthened against the Japanese yen to 2.7791 or 2.7859. However, it did weaken against the British pound to 5.6386 or 5.6520. It also slid against the euro to 4.9024 or 4.9140. Regionally, the ringgit was also mixed against ASEAN currencies. It was marginally higher against the Singapore dollar at 3.2540 or 3.2619, and it gained slightly against the Indonesian rupiah to 254.6 or 255.4. However, it did inch down against the Thai baht to 12.8647 or 12.9050. But the ringgit did remain unchanged versus the Philippine peso at 7.23 or 7.25. Market analysts say the ringgit's near-term direction will likely remain influenced by global risk sentiment, particularly the evolving US-China trade situation, energy market sanctions, and also domestic economic fundamentals, which have so far helped keep the local currency relatively stable despite heightened external volatility. Now, we're going to be continuing with some local economy. A public policy analyst says that the reintroducing the Goods and Services Tax or GST after Malaysia's next general election could be crucial to strengthening the country's fiscal position as debt servicing costs continue to mount. Now, Taylor's University Pro Vice Chancellor for External Engagement, Professor Ong Kiang Min, he said that the timing would be right for the government to revive GST as part of a broader fiscal reform once political conditions allow. Now, Ong said that during a panel discussion on Budget 2026 hosted by Hong Leong Bank. Now, in a quote, he said, "Maybe that's something we can do after the next general election, which could be as soon as 2026. He noted that Malaysia's debt servicing ratio is projected to hit 17% next year, and that's surpassing the government's 15% threshold of total revenue, signaling growing fiscal pressure. Ong added that allocations for emoluments, retirement charges and also debt servicing are expected to rise to 62% of operating expenditure next year, and that's compared with 55% in 2022. He explained this means more than half of the government's spending is already locked into fixed commitments, stressing that new revenue sources are necessary to prevent further fiscal strain. Now, he did mention that the GST could be reintroduced at a lower rate initially to make it more palatable to consumers, while savings from targeted subsidy rationalization such as the reducing the Budi Madani RON 95 fuel quota could help offset the impact of household spending. Meanwhile, PwC Malaysia tax partner Ang Wei Liang said the previous GST regime, abolished in 2018, had failed largely due to a trust deficit spiral between businesses and also the government. He said that from the Finance Ministry's perspective then, the amount of GST refunds they had to pay out was far higher than projected, so they withheld the refunds. Businesses suffered because it affected their cash flow and they priced GST into their operations. This is what I call a trust deficit spiral. So we need to trust each other to actually implement this kind of thing. Ong also added that the ongoing implementation of e-invoicing could pave the way for a smoother, more transparent GST system in the future by improving compliance and also reducing refund delays. Now, both experts agreed that while the move may be politically sensitive, reviving GST with stronger fiscal governance and also better public trust mechanisms could play a key role in Malaysia's long-term economic sustainability. Now we've got some corporate news updates. BWYS Group Berhad is taking a major step toward expanding its manufacturing capacity with a 94.48 million ringgit land acquisition in Kuala Langat, Selangor through its wholly owned subsidiary BW Scaffold Industries Sdn Berhad, also known as BWSI. Now, the move marks a significant investment aimed at supporting the group's long-term operational growth and strengthening its position in Malaysia's steel manufacturing and scaffolding solutions market. Now, according to the company's Bursa Malaysia filing, BWYS entered into a sale and purchase agreement with Compass IP Sdn Berhad for the acquisition of a freehold industrial land parcel, which will serve as the site of a major new facility. Now, the group plans to construct a state-of-the-art factory complex featuring factory buildings, storage warehouses, and centralized labor quarters designed to improve efficiency, logistics, and also workforce management. BWYS said in the statement, the group intends to construct a new factory comprising factory buildings, warehouses, and centralized labor quarters, and is expected to increase the operational capacity of the group, adding that construction is expected to commence in the second quarter of 2026. Funding for the purchase will come from a combination of internal proceeds as well as external financing, including bank borrowings and proceeds from the proposed disposal of another property. Now, this strategic approach allows BWYS to optimize its capital structure while positioning itself for expansion without significantly straining its cash reserves. Now, the company noted that the proposed land acquisition aligns with its long-term growth and operational efficiency strategy, as the new factory will help boost production output, enhance supply chain integration, and also meet growing market demand both domestically and regionally. The statement also added that the board is of the view that the proposed land acquisition will contribute positively to the financial and operational growth of the group in the future. Now, this acquisition, however, remains subject to shareholder approval at the upcoming Extraordinary General Meeting, or EGM, and the necessary clearances from relevant authorities. BWYS expects to finalize the transaction by the first quarter of 2026, provided all approvals are secured and no unforeseen delays occur. Industry analysts view this move as a strategic expansion that positions BWYS to capitalize on the rising demand for steel-based construction materials and also industrial infrastructure as Malaysia accelerates its post-pandemic economic recovery and large-scale infrastructure projects under the 12th Malaysia Plan. And finally, we're going to be wrapping it up. We've got some major corporate developments and deals across Malaysia. Here are the headlines for you to keep an eye out for today. And number one, Petronas Gas Berhad, they said it is facing a claim of approximately 68 million ringgit for special damages in the class action over its gas pipeline fire in April that destroyed homes in Putra Heights and also injured its residents. Number two, Zikon Berhad's unit will build run a 100 megawatt solar plant in Kuching's Kota Petra Green Technology Park under a 30-year power deal with state utility Syarikat Sesko Berhad. Our next headline, Perak Transit Berhad said it's business as usual after Bursa Malaysia questioned a sharp share price drop and spike in trading activity that nearly halved its market value. Our next headline, Heineken NV, which holds a 51% indirect stake in Heineken Malaysia Berhad, They said that beer volume in Malaysia grew by a low single digit in the third quarter of 2025, performing ahead of the market, even as the Dutch brewer navigated a mixed quarter globally. At number 5, we talked about this earlier, BWYS Group Berhad is acquiring a 28.9-acre parcel of freehold industrial land in Kuala Langat, Selangor from Compass IP Sdn Berhad for about 94.5 million ringgit. Those were your top headlines for today to keep an eye out for in terms of investing and trading. And there you have it, ladies and gentlemen. That's a wrap for the Morning Bell updates with me, Wan Izzul Islam, right here on KleverStock. Thank you so much, investors, for choosing us. Stay tuned for more content coming up soon and have a lovely Thursday. We've got one more day tomorrow until the weekend.